Good morning and welcome to Unusual Activity powered by FinancialJuice.com with George Avedon and Milton Marmonides. Thank you for joining us this 29th of January 2015. As always, lots happening in the marketplace internationally, domestically here in the U.S. Lower markets yesterday carried through the Asia markets as well. Additionally, we are pleased to have with us Larry Gaines from Power Cycle Trading. He'll be with us in about 10 minutes or so. So let's get down to the numbers, what we're seeing this morning. Let's jump right in, folks. We have the S&P futures higher by 6.5 points at 1998.00. Really, we talked about that 2000 level yesterday. We'll get into the technicals in a few minutes here. The dollar at 94.499, higher by 0.024. The euro higher by 0.0018 at 1.1332. Gold this morning lower, continuing its decline from that above 1300 level at 1272.2. Crude oil is higher this morning by 27 cents at $44.72. We talked about that 44.20 level, momentarily went below that 44.20 level yesterday, clearly above that this morning, but again, that is a critical level for crude oil, and that's something we will continue to monitor. The 10-year below that 1.8 again at 1.748, and the 30-year. This is the surprise of it all, folks, is maintaining that below 2.5 level at 2.315, and no doubt that that the central banks are monitoring this rather closely. So, folks, let's jump into what we're seeing, what we saw yesterday in the Dow Jones Industrial Average. We were lower by 1.13% at 17,191.37. S&P 500 lower by 1.35% at 2002.16. NASDAQ lower by 0.93% at 4638.00. So yesterday we did have a little bit of a positive tone in the morning, but certainly things turned towards the sour end through the rest of the day. A bit of a selling pressure. Certainly, we are in the midst of as you know, earnings season, and certainly the larger names are in play today, and that certainly makes for an interesting market. Let's jump into some geopolitical. Certainly, keeping an eye on the Middle East. It seems as though a little bit more geopolitical events, if you will, for the last several days. We're keeping an eye on the Middle East, specifically ISIL, of course. If there's anything significant coming out of those operations there, certainly we're hearing after Saudi Arabia's King Abdullah's death, lots of rhetoric with respect to oil. And remember, folks, it's just rhetoric at the moment. There's really nothing concrete in terms of opinions that are being circulated around. So that's something we want to, really preface that with a little bit of a caveat as we're listening to and hearing for specific news in coming in from the Middle East. Couple of other things that we're focusing on this morning from a theme perspective. What we always like to do on a daily basis is what are some of the more global themes that may impact the markets this morning. So if we take a look at One of the things that certainly, from a geopolitical perspective, certainly the ramifications of the Greek elections, that's still a lot of talk about that, a lot of political, a lot of wrangling, a lot of geopolitics, opinions, and pundits. So that's still developing, and that's still wanted to see that come through. But also, it seems as though Ukraine, the Russian-Ukraine situation is back in focus, and specifically what we look for there is anything out of the norm. And again, we don't want to minimize certainly the situation that's happening between the Russians and the Ukrainians, but again, we talked about this yesterday, the fact that the markets have more or less internalized conflict there for the foreseeable future, at least into 2015. So one of the things that we take a look at is from a geopolitical perspective, pundits, analysts, if there's anything unique that's coming out of that particular situation. We know that possibly there's going to be more sanctions coming out from the West, and really what this turns back to is what we've been discussing is Russia's relationship with China, and that's something really important. Russia's economy is back in focus, folks. It's always been in focus for us, but again, it seems to be coming around again with respect to the overall market perception of things. Additionally, certainly continued euro weakness, dollar strength, that's something that we're keeping an eye on. Continued oil weakness here, folks. We've discussed that. We'll get into the technicals in a bit here. One of the other things that we are keeping an eye on is this notion of deflation risk. It's in the lexicon of central bankers. It's in the lexicon of pundits and analysts and so forth. So as rates, for example, in the U.S. Treasuries maintain those low levels, and yesterday we hit a all-time low on the 30-year, right around the 2.315, right around that area there that we are currently, and that's something that we want to keep an eye on very, very closely. And again, this is one of the central themes that we are keeping on. Also, part of the central themes is certainly we are an earnings season, and that's certainly pointing to more volatility, specifically with the larger names. For example, Alibaba misses, and we'll get into some of the specifics of those in a few minutes. We wanted to jump into, from an economic perspective, Baltic Dry Index at 632 points now, falls 5.1%. We really enjoy watching this particular indice specifically for the purpose of potential economic activity into the future. And this is a great index because it really monitors and tracks the activity from shipping, specifically in cargo ships and so forth, with respect to grain, raw materials. So that's really, we feel it's really important to monitor on a daily basis. This morning we did have initial jobless claims at 265,000 versus the 300,000 expected. And remember, we did have a shortened week, so that does tend to increase volatility in those initial jobless claims. Weekly continuing claims for January 17th was 2.38 million versus 2.4 million. The previous revised was from 2.44 to 2.46. Again, this morning we are anticipating 10 o'clock pending home sales, and 10:30 is the EIA natural gas report at 10:30. And folks, keeping an eye on specifically natural gas, this is something that it's still below that 3 level at 2.849. So as volatility is maintained in for example, the West Texas Intermediate crude, we had the numbers yesterday, and this morning the natural gas report, certainly it does tend to stoke the fire for the volatility. Also, we had German CPI for January. Preliminary year-over-year was negative 0.3% versus the expected 0.1%. previous was 0.2%. One of the things that we've been mentioning for quite some time, folks, is the fact that crude oil being so low, Brent crude being much lower as well, it does and will have an impact on CPI and PPI data, and that's something that we want to keep an eye on rather closely. Again, with respect to the oil prices, you're going to continue to hear various conversations from specific countries, from specific companies, as it relates to the lower oil prices. And as we mentioned specifically on the Russian-Ukraine side, there's could be some internal strife in Russia. And something to keep in mind, and this is something we speak to folks on a daily basis with respect to Russia, and that is Putin's approval rating is an all-time high, folks. So no matter what's happening outside of Russia, opinions and so forth, approval rating internally in Russia for Putin is rather impressive. So what we'd like to do now, actually, is we are very pleased to have Larry Gaines with us from Power Cycle Trading. As we're talking about what's happening in the market, we'd really like to bring Larry in and have us introduce himself and have us get to talk about what we're seeing in the markets this morning. Larry, thank you for joining us this morning.
Thank you very much for having me here, George.
Great. Larry, so first and foremost, please tell us a little bit about yourself and what you do.
Okay, just a brief background. I've been trading for over 30 years. I started out trading back in 1980, I believe. So it was trading foreign crude oil, cargoes of crude. So I've been in the oil trading industry background for over 20 years, and ran was executive vice president for one of the largest oil trading companies, and ran their international trading desks out of Bermuda for over 10 years. So I've been involved in pretty much all the markets as far as the trading. Got involved in options back in the mid-'80s, trading options on cargoes of crude oil. So that became kind of my passion, actually, when we started doing that. And so what I've evolved into is I've got a company now. It's called PowerCycleTrading.com. And what we do is I educate traders on all the various trading subjects, and really kind of specifically focus a lot on options, just because of the defined risk and all the great strategies that you can do with options. But I'm pretty versed in all the markets because I've traded most all of them. And again, a lot of background in energy and commodities. So that's kind of my brief story.
Great. Larry, thanks so much, and I'm glad you mentioned options. One of the things that we monitor on a daily basis is the impact of equity derivatives on the underlying equity. And perhaps you'll agree that derivative traders are a unique breed, and it's absolutely critical to monitor those kind of indicators for the underlying security.
Absolutely. Derivatives are such a huge part of the market, and they're also kind of the unseen part of the market. So you don't really know the impact of all the derivative trades that are based on the underlyings. They can have just a gigantic impact. You just saw that a week or two ago when the Swiss franc they dropped their peg to the euro, and that crushed one of the big hedge funds, Everest Capital, which I'm very close friends with the owner of that company. So it was kind of a bad feeling, a bad moment for me. But that's the kind of stuff that impacts. You don't know what the derivatives are behind some of these underlying structures.
Sure. No, absolutely, and that's so we keep we keep an eye on rather closely, in addition to insider transactions and various news items and data items. We certainly keep an eye on equity derivatives specifically as it impacts the underlying security. Now, I'm glad you see that. Larry, let's jump into what's happening in the marketplace this morning, if it's all right with you. Certainly, we've had quite a bit of volatility. Would you agree? Within the last, if January is any indicator for the rest of the year, let's talk more macro markets here. It seems as though 2015 is setting up to be a rather interesting year.
Yeah, absolutely. I think I think in 2015 you get your crystal ball out. If you look back to 2013-14, you had very kind of quiet volatility. Nothing too extreme. We hardly had any corrections that were more than maybe 5 or 6%. This year, though, there's more uncertainty in the market fundamentally with the the slowdown with Europe and Asia and the falling oil prices, which really highlight the deflationary aspects and low growth globally. So that's really freaked the markets out. I mean, that's a good thing for consumers, but it's a bad thing for just general overview of the global economy. So with that being said, and the QE ending in the U.S., and now, okay, when are they going to raise interest rates? There's that uncertainty which markets hate. So that's going to increase and keep volatility, I believe, pretty high in 2015. So it's going to be a market where you need to, be focused on selective stocks and not the broad markets to bail you out. So you need to be a stock picker or a commodity picker or something that's not correlated perhaps, and just look at those specific things and not looking at the major broad markets to be the big trend. They could be a trend, a bigger correction this year. Not to say that the markets will maybe collapse, because there's really no place to put your money. Interest rates are low and keep going down, so it's a very difficult market for the big institutions and just for individual investors.
Yeah, no doubt. One of the things that they came up in conversation with an analyst some time ago. Actually, I think it was late last week into the beginning of this week, and that is the yield on the S&P 500. And this is something I wanted maybe get your thoughts on this a little bit. If you're looking at the S&P 500 yield, it's currently 1.87. If we're taking a look at the yield on the 10-year, that's at 1.751. The thought process is, as long as that S&P 500 yield is higher than the 10-year, you're going to have a little bit of a bid in the S&P 500. Would you agree with that? Or by all means, it's some thoughts on that. How do you approach such a dynamic? Any thoughts on that?
Well, it's amazing that bonds keep pushing higher, which pushes interest rates lower. But it's a kind of a two-sided market. You've got the big institutions and governments, man, they want security. Yeah. So there's no place that they can get it other than the U.S. bond market and dollar right now. So that it's just keeping the bonds, bid. Right. But then you look at the other side. Where does the other money go? I mean, so there's going to be a lot of people, though, that are willing to take that additional little bit of risk to try to get that extra return. So, I think that spread can stay fairly narrow for a while because there are just too many uncertainties, but then there's no place to put your money. So it's a conundrum there.
Yeah, no, it's very interesting. I'm glad you pointed out that whether it's governments or pension funds, our contention is that since the crisis, the perception of risk has changed, over the years, and in order to get really high rated securities, you're going to have to, pension funds, governments, and larger institutions, although they're chasing yield, they're also looking for a little bit of security, right? So
absolutely.
So I think that perception of risk has changed. Would you mind if we dive into? Let me just ask you, what are you setting up for today's trading? What's on your radar in today's trading? Please, any thoughts on that?
The big thing that we've been watching for my group and the people that follow me is I'm a big proponent of using seasonality. And try to focus on some of the seasonality trends and using that kind of as I call it the anchor, the overlay. So I'm constantly looking at seasonality type of plays, and a lot of these things can be good because they're non-correlated to the broad market. So looking at other kind of commodity areas, but right now the thing that's in play actually is RBOB gasoline. So this might not be for everybody, but it's a really great seasonal play. So you've got that seasonal, current at your back. So you've got the wind at your back because of every year for the last 15 years, RBOB, or unleaded gasoline, has had a seasonal tendency to trend up from about the end of January, early February, all the way into March. And the reason that's fundamentally the case is because the refiners and jobbers and the guys that have to supply gasoline, they start, they have to buy early. They have to get set up and have enough accumulation. So what tends to happen is you'll get a bid on RBOB, or unleaded gasoline, in the U.S., and the spread between gasoline and crude will widen. So if you can see my charts here, I don't know if are you able to see these charts?
Absolutely, absolutely.
Okay, so let me show you what we're doing here, and we just started doing this last week. So I'm going to put up, and there are a couple ways to do this. So I'm going to put up RBOB May contract. So let me put that up real quick. Okay, so that I'm going to put this down on the daily here.
Sure.
Okay, so now I'm going to switch this over on the right chart to crude oil on the May contract. So we're going to do just a spread on that. Okay, so what you're going to see here, this is the May futures contract of unleaded gasoline on the left, and this is the May futures contract on crude oil on the right. So just, this is my trading model that's a proprietary model that we use. Now, if you'll look at this model, just what you'll see here is cycle 1 is up, cycle 2 now is up. If you look over here on the crude oil, you'll see cycle 1's up, but 2's down. So what that means is that gasoline has more momentum than crude oil. Now, the other simple thing here, this is a parabolic SAR, which is a trend indicator. So that's below gasoline, showing the trends to the upside on the daily, and it's on the upside over price on crude, so it's down. So just from a technical aspect, it's showing, even though you can't really see much of a move, gasoline is starting to move higher. Now, the thing about doing it as a spread is that you're hedged in case crude keeps moving lower, which it has been. But this also helps the spread on RBOB. So if you, right here just on Monday, put that spread on, bought RBOB, sold crude simultaneously, and now up $1,000 per contract on just one contract. That's up over $1,000 from Monday to today. So that's one way you can play the markets and not kind of be looking at the broad markets, the U.S. and stuff, and another way to play it. Now, one other way to do it for a smaller account is you can also look to do it as using ETFs. So you can look to buy UGA as something that we're doing, and then you sell against it USO, and you do that as a spread. The only problem with this is you can see here, so this is a very, so you can see how price is moving up on UGA, moving down on crude, USO. Now, one thing that is becoming a little bit difficult though with USO, you can't borrow the shares to short. So an easy way around that we're doing is that we're going out to the May contract and doing synthetic short using, you just sell a call, buy a put at the money, and you structure it that way. So doing a lot of creative things, but things to, outside of just, okay, let's go along the S&P today, let's go, that stuff. We do that too, but trying to look at more creative things, ways to look at other parts of the market.
Sure, absolutely. I have to ask. I mean, certainly with volatility in West Texas Intermediate specifically, do you have what's the impact? Certainly, obviously, it's a gasoline. What's impact? Is there any? Are you putting any limit? How do I ask this correctly? What's the implication should oil come down significantly? Certainly the 44.20 has been talked about at a significant level. Should we move below that? Do you see an implication? Do you see any effect on that on gasoline, at least for the short term?
No, actually, I don't really see any effect on. I mean, gasoline prices will go lower, right? But that's because the crude's going lower. But the actual spread between gasoline and crude will widen. Gasoline will strengthen or stay where it is, and crude will go down. So I'm just on this. That's the beauty of these kind of spread plays. When you get the seasonal effect to go, in your direction, you can play one off the other and be hedged. So even if crude on the right-hand chart here, just really craters back down to those prior lows, maybe I've got support at here. I can show you just a second if you have a minute. I'll just pull up my macro chart here. So I'll pull up crude here, but this is just some of my price analysis on crude if you'd like to look. Let me pull up the monthly. Now I just did a course. I do a lot of trading courses, and so I did a course on seasonality on crude about in December, and we did a tremendous amount of analysis on how to play the market cycle. So what you're seeing here, this is a macro monthly chart of crude oil, and you're going to see those prior highs to lows. Now this is just using Fibonacci. You can see we've just blown through all these levels, and this is just based on chart support. So you're coming into this level here, $42, and also a trend line. So this was a macro long-term trend line. Now the tendency usually for markets is the first time down to major trend lines, they usually bounce. So you're seeing the market slow down a little bit here, and then you've got 42, and then you've got 37, and you've got that prior low. So markets can definitely exceed, but the other thing that's going to start happening is as you get into February, you also get into seasonality time frame for crude in general and energy, which is usually a cycle to the upside. So if you look back and you look at how crude oil bottomed out back in 2009, you had 7 months straight hard down. Right now we've got 7 months straight hard down. Then we saw a little bit of a hammer pattern here, but the market started, if you look at this month, February, started to recover February, March, and this is also a seasonality time frame of the year. You can go back and look at seasonality studies, and this is also when the markets catch a bid on energy. So we could start seeing a little bit more of a bottoming pattern in February, March, and that's what I'm looking for. But the thing that you have to look at then is momentum off of that, and so what I look at is my trading model. So let me pull that up. So I'm going to look at what I'm going to be looking for here is this. We need to get any type of cycle change. You have to have momentum, right, to push price around. So right now we have negative momentum on the monthly, so it's not there yet. We still have, it's totally oversold with no momentum. So then we shift it down to the weekly. So I do this what we call top-down market analysis. So you can see though now, see the momentum here. It started to shift. It's not as extreme to the downside, starting to push. So if this goes above zero, that's showing positive momentum. So I think there's a higher probability that get into February, March, we'll get a little bit more bid, a little bit more momentum, and this will be a U-shaped recovery. I mean, it's not going to be a V-shaped straight down, straight up. The last time we had this move down, it took about 3 to 4 months before we moved, but you did have your lows in. And you know, every other Wall Street big hedge fund, they're all looking at this, and they're all going to start nibbling. So then you look at the weekly, and then you break it down to the daily, and you can see that the momentum has shifted to the upside, and we're starting to get a little bit of a bid here. So this is what the pattern will tend to look like, but it can stay flat here, for 1 or 2 or 3 months. But you're going to probably start seeing the lows here. The other thing too, just based on oil studies, if you look back at production and when they shut it in, the marginal production, most of the marginal production in the world is about $60, $65. So we're way below that. So you'll see that coming through to the markets in 3 to 6 months. So there's going to be less production in the market, and the markets will recover based on that, because you have to have prices over at least 60 or so. Otherwise, these guys can't produce these deep wells and stuff out in the Gulf and stuff like that.
Right. A question for you. Certainly this is really great stuff. One of the things that comes into play, we watch both. We watch fundamental analysis, macroeconomics. We watch technical analysis as well. We monitor just about everything that's out there. How do you incorporate, or do you incorporate not just news, but perhaps rhetoric or opinions on specific, for example, even crude oil. Do you incorporate that at all? Even perhaps not it's a little difficult to quantify, rhetoric or opinions, but how do you at least manufacture an opinion on crude oil? Certainly you have the seasonality of things and technical analysis, but do you incorporate news and outside influences on pricing?
Yeah, for oil in the global oil markets, I do for sure. That's about the only, well, the major thing, but and also the other markets too, because the Fed and these central banks, they have such a big influence. But so if I look at the oil markets, the big central bank really still is OPEC, and it's really Saudi Arabia. So if these guys are going to start squirming here and get really irritated, so when you start to see if you number one, if they ever call an emergency OPEC meeting, crude's
Hmm.
going to skyrocket off that. So that's one news event to put on your radar screen. Anything with rumblings within OPEC, and if you hear them call a emergency meeting, then you know something's going to probably happen. The next thing is that who blinks first. So the Saudis have the lowest production costs in the world, about 24 bucks, I guess is what I've read. So
Right.
they're not going to blink first, but they could get pressure from all the other guys in the Gulf, and that over time politically, people will start calling in favor. So you start watching down here. There's a lot of pain going on, and when there's enough pain, there'll be some decisions made to change things around.
Sure, absolutely. Larry, I know you're getting ready for your trading day. Any last thoughts on going into this market? We're currently let's take a look at the futures this morning, higher by about a little over six handles at 1997.75. Anything that's with respect to more getting a little bit off topic here in terms of crude and gasoline, but on the more macro level, anything that you're watching that our listeners should be aware of?
Well, I'll just go through here real quick, and you can see the big picture here. I like to break down things. I tell my members, do what we call top-down market analysis. It'll take us 2 seconds visually, but you can see here, this is a macro monthly time frame on the S&P. We're still in a major macro trend up until we start breaking below. This is just a 21 EMA here, but if you drew a trend line, major support into that, then if you break it to the weekly, still in a nice, we're just up here, still in a trend to the upside. It's being tested, but we've been testing this kind of thing for 2 years, and it's never broken this 50 simple moving average. And then right now, so the longer term trend is still up. The medium term trend is broken down below these moving averages, but you could say that you could build a case that we're kind of coming into some support. So every time you think the market's been rolling over, it's bounced. So watch the volatility, the VIX, but I think right now, we could start seeing a little bit of a, you get down here. This is I believe the 200-day moving average. So if you are short, look for, don't get too greedy. Take your shorts, but take your money when you get your profits.
Right.
And maybe trail a little bit. But right now, it's been one of these markets where, we've been in these macro weekly uptrends, and until that really breaks, it's been hard to be a very aggressive short.
Sure. No, absolutely, Larry. Thank you. Perhaps next time when we have you on, we'd love for you to discuss, the right way of, as you just said, should you be in a short position in a upward trending market, how to properly take your prints, and the importance of that. We'd love to have you on again. Would that be okay with you?
Absolutely. This has been great. I really enjoyed talking the markets, and thank you very much for having me here today.
Absolutely, Larry. Thank you. So, folks, you can find Larry at powercycletrading.com. Larry certainly comes to us with a tremendous amount of trading acumen in both in equity markets and derivatives. So, what a great pleasure to have you on, Larry, again at powercycletrading.com. Larry, thank you so much for joining us, and we wish you a great day.
Thanks, George. Y'all have a good one. Bye.
You as well. Thank you. So, folks, let's dive back into what we're seeing this morning. Certainly, as Larry talked about oil, specifically on the technical side, but really keeping an eye on what you see here, some specific ETFs and ETNs that we like to keep an eye on from a more macro perspective, some of the more oil names, for example, in the OIH, and that's something to keep an eye on. Let's take a look at commodities, energy, and raw materials. We have again crude oil at $44.85, higher by 40 cents. Gasoline up 0.0065 at 1.3835. Natural gas lower by 0.015 at 2.827, and of course heating oil higher by 0.0062 at 1.6160. We have gold this morning at lower by $18.30 at $1,268.80. We have silver now below that $18 mark at $17.44, lower by 65 cents there. And also cocoa lower by $16 at $26.99. So let's jump in also into the yield curve. Certainly has been on focus, as Larry said, and as what we've been mentioning. There's been a very strong bid on the Treasury side, higher by on the 5-year 1.281, the 10-year 1.763, and the 30-year 2.330. Certainly a flatter yield curve that compared to, let's say, a year ago. And again, some commentary here. Janus's Growth, formerly with PIMCO, in Investment Outlook says Fed to raise interest rates in late 2015, indicating that they won't move quickly. So again, something to keep in mind on. On the technical side, looking at the ES, markets had a very interesting start of the year. Certainly, a lot of volatility, large moves, a lot of whipsaws. So some of the key levels to watch here, folks, is certainly intraday the 2000, 2002, and support levels of 1980 would be ideal. On the intraday level, we may actually see that 1988, 1990 on the S&P future. So again, really significant volatility as of late. On crude oil, watching that 44.20 level. Should we, as Larry said and what we've been mentioning, certainly the 42 level is an interesting support there. Should we go below that, we may reach that 39.40 handle on the crude oil. In the VIX, watching that 2021 level of resistance again, not a range of resistance support. So again, watching that 14 level on the support side. So again, currently at a resistance level, today's activity would either confirm the break or show a breakdown from the resistance level in the VIX. Gold, certainly we came down from that 1300 level. We are still above that 1250 level that we've been discussing. That 1250 level has been a rather significant level as of late. And again, that's something that we want to keep an eye on. On the dollar, DXY, folks, it's been on a tear as of late. Certainly at 94.537, excuse me, and the euro at 1.1332. Certainly with activities in Greece and rhetoric coming out from that, certainly pointing to a little bit more volatility on that end. We had a few stocks that we wanted to go over with you folks. OPK, OPCO and Pfizer received regulatory clearance for global agreement. We've seen quite a bit, if you remember, quite a bit of insider purchases on OPK as of late from the CEO. So that, again, that's something rather interesting. Kate Spade sees fiscal year 2014 revenue of 1.13 billion to 1.14 billion. Consensus was 1.10. FTNT Q4 billings up 35%, best growth in 16 quarters. Fortinet seeing success in enterprise, plans to ramp sales rep higher. So also RCL reports fourth quarter adjusted earnings per share at $32 versus $42 estimated. Big news on Baba here for Alibaba. So revenue rose 40% to 4.2 billion in the December quarter, missing the average analyst estimate of 4.45 billion. Gross merchandise volume for the quarter increased 49%, and annual active buyers rose 45% year over year. Mobile transactions accounted for 42% of Alibaba's overall transactions. So again, that mobile and rather interesting. I want to bring in. Remember, Alibaba is one of the largest positions held by funds. And if we take a look at Alibaba this morning, currently at $88.99, down, call it a little bit off of 10%. So a significant impact on the shares here, folks. Also, Facebook mobile and revenue accounts for 69% of total ad revenue in Q4, up from 53% Q4. So again, that mobile revenue, folks, if you remember some years back, there was a lot of conversation whether or not Facebook could really monetize that mobile end, and clearly they have been, and that's something that's really interesting to watch. Qualcomm price target lowered to $75 to $75 to $85 from $80 to $90 at Wells Fargo. We can take a look at Facebook. So let's get back into Facebook just quickly. A little bit about higher by 0.6% at $76.70. And Qualcomm, we can take a look at currently $64.05 now, also down about 10%. So, folks, we want to take a look at quickly on the syndicate level. ASPX full exercise of underwriters' options to purchase additional 6,000 shares. CP 700 million debt offerings. GEVO also an offering. MRTX, we have a public offering. OMER, we have a proposed public offering of common stock and pre-funded warrants. More on the syndicate side. OXFD files for 50 million common stock offerings. I remember, folks, typically the initial reaction in stocks could be to the negative, as this can be typically is a dilutive effect on the particular securities. PFMT offering stock and notes. REXR 10 million share offering. VTAE underwriters to purchase additional 450,000 shares. XNPT offering 100 million in convertible senior notes due 2022, and ZFGN underwriters fully exercised 414,000 shares. We wanted to also just bring up just a few large insider purchases. We have ALNY. Let's call it a little more than $1 million worth of purchases, and in ALNY. And Sears Holding, we have a 10% owner purchasing just under 600,000 shares, $600,000 worth in SHLD on the insider purchases side. So, folks, there you have it. Certainly, we have quite a bit, very interesting markets taking place this morning. Let's take another peek at where we are. We have the S&P futures actually, let's call it flat now at 1991.25, and we have crude oil higher by 28 cents at $44.70, and we have a 10-year 1.753. Again, pointing to, it seems as though volatility really isn't ending anytime soon. Folks, thank you for joining us this morning. This has been Unusual Activity powered by Financial Juice. with Milton Marmonides and George Avedon. We had a special guest, Larry Gaines from Power Cycle Trading. Thank you for joining us this morning. Wish you a great day and good hunting.